The easiest kind of business to move offshore is the kind of business that can fit in a backpack, the kind of business that lives in the cloud. This is the kind of business that you can do with remote work that's totally location independent. It's your efforts, it follows you, it's sitting on a server somewhere. It's a totally location independent business. That's the easiest kind of business to offshore. But what if your business isn't so easy? What if you've got physical people on the ground doing work, answering emails, going and doing jobs? How do you offshore that? People are making mistakes on both sides of the coin. They're either being too aggressive or they're being too conservative. I'm going to tell you how to avoid both of those approaches in this video. Hi, I'm Andrew Henderson from Nomad Capitalist. Let me just say right out of the gate, this is a really complicated subject. I'm going to try and make it as basic as possible so that everyone understands, but I also want you to understand that this isn't tax advice. The kind of stuff we're talking about requires more in-depth studies, memo writing, all kinds of official tax stuff that I work with accountants and tax lawyers all the time to put together for people on a global level. So don't take this as advice, take it as an idea and understand that there is an underlying concept to all of this. Here's the deal. Every country out there is trying to figure out, how do they make sure that they're getting the tax money that is owed to them. And so because we're ingrained with the idea that we have to pay high amounts of tax, what a lot of people will do is they'll set up a company like the guy who came to me recently. He has jobs physically on the ground with guys doing muscly work in like 12 or 13 different countries. But he has an office in the United States. And so what they've done is they've said, okay, well, all the money can come into the United States and we'll just pay tax on all that money and then we'll just pay the guys and we'll just have a huge tax bill. When in reality, he's overseas, the marketing's overseas, the sales is overseas, all the stuff, the meaty stuff that brings the majority of the money, that's overseas. That's responsible for the bulk of the profit. And that bulk of the profit is being taxed in the United States or fill in the blank country, Canada, Australia, whatever. It's being taxed when it doesn't necessarily have to be. And so the same principles of the big companies, you see these companies in the media, the Starbucks, the Googles. I'm not picking on anyone in general, just you've heard their names out there that they do these kinds of transfer pricing tax strategies. That would apply to a company like this too, because if a lot of the work isn't being done in the United States, whether the physical work or just the mind and management work, then chances are that company may not need to pay tax on everything it's earning in the United States. And so the mistake that people make is they will often pay way too much because they haven't structured their companies properly. They'll have all the money-making parts of the business offshore, but they don't have two separate companies to where either the money comes into the US and then management fees go out to the foreign company, or potentially better, money comes into the foreign company and then the domestic company gets paid as kind of a staffing entity or a billing entity or any of the different strategies where they're paid at arm's length. Because think about it. If I came to you, let's say you have a company that offers muscle services, right? And I come to you and say, hey, I want to hire some muscle. You'll charge me a certain wholesale rate, and I'll pay that rate, and you'll make a spread between what I pay you and what you pay your guys. Chances are, if I went out into the marketplace and tried to hire customer service people or any kind of labor or anything like that, I could find someone who would do that for me with a relatively low markup. That's the staffing company principle. Or if I wanted someone to process credit cards for me, I could probably find someone to do that relatively affordably because they're just processing credit cards for me. The markup on that isn't that great. And so what people are doing is they're paying tax on 100% of a pot when in reality, a third party would do it for 15% of the pot, just as an example percentage, and that other percentage can be moved somewhere else where the actual work is being done. So if you're someone who's living overseas and you're still running a business based in the United States or Canada or Australia, chances are you might be paying more than you need to be paying, and you could be setting up a series of companies where money goes through to where everyone's getting their proper piece. No one's getting too much and no one's getting too little. You're paying based on arm's length principles where if you have, customer service people, you're paying based on a fair market valuation. That's where things like transfer pricing studies come into play, where they say, okay, hey, we go out in the marketplace and figure out, hey, what would someone manufacture this product for me on the open market? Okay, that's what you'll charge your own company. So you have one company selling this stuff overseas, one company making it domestically, and the money goes where it belongs. Same with staffing, same with billing, same with so many different other things that right now you may have a flat corporate structure where you're paying a lot of tax, when in reality you're just paying too much. Now, there's the other side of the coin. If the first part is too conservative, the second part is too aggressive. What people will also do is they'll say, I'm running an Amazon business. I'm selling products on Amazon. But you know, my customers, when they call customer service, they want to hear an Australian voice. So I've got a bunch of people sitting in Australia doing work for me, doing my customer service, authorizing refunds, taking orders. That's a problem because there are certain rules where if you have people working for you in Australia, you should be paying something in Australia. And so the last thing that you want to have happen to you is that the ATO or the IRS or whomever comes in and says, well, this company now should be taxed in Australia because you've got all this stuff going on over here. You don't want part or all of your company's profits to be taxed just because you hired some people. So what you could do is you could set up the same kind of structure. You set up a staffing company and you go out in the marketplace using a tax professional and you put together a transfer pricing study and say, okay, what are people charging for people who answer the phone and provide customer service and provide refunds and follow SOPs? Okay, here's the price. Great. It's 20% higher than the actual wage paid. Great. We'll have a company in Australia. We'll move 20% extra money on top of the payroll to that company, and that 20% will be taxed. And that way we know that we won't have a situation where all of our profits are taxed because we're giving everyone their appropriate piece. Okay? What we're doing is we're basically expanding the supply chain and figuring out, what is going on in each place. This is what I always talk about. There's personal and then there's corporate tax, and either one can sink the other. There are plenty of people who have come to me and said, Andrew, I'm personally offshore, but my company's still sitting in California and they're getting screwed. Then there are people who come to me and say, Andrew, I have a corporation in Hong Kong, but I'm still sitting around in Adelaide. And I say, you're completely screwed. You've got to have both work together. And so if you have both working harmoniously, the personal and the corporate, you can then start putting in place multiple corporate structures that interact with each other at arm's length so that everyone's getting paid just enough. That is the big thing that you need to consider. Again, if it's just you, if it's just a bunch of Filipino VAs, if it's just a bunch of independent contractors, legitimate independent contractors, you're just hiring them, a social media person in the US, that may not be an issue. Again, always worth getting proper advice on this. Never rely on tax advice from a YouTube video. But if you have people who are working for you in different places around the world, you want to make sure that your corporate structure reflects that so that you're not paying too much and so that you're not paying too little. I'm Andrew Henderson, and if you're looking for a way to legally reduce your taxes, build your freedom, and create wealth faster as a global citizen, then you've come to the right place. I want you to do 3 things right now. Number 1, click the button to subscribe to our channel. Make sure to get notifications so you never miss a new video. Number 2, get a copy of our #1 best-selling book, Nomad Capitalist, on Amazon and learn all the dozens of benefits of our lifestyle. And number 3, if you're already a 6 or 7-figure entrepreneur and you want to put these strategies in place, go to nomadcapitalist.com and find out how to get some help.